Hi, everybody. And in this episode of Relax, I Got This, we're going to talk about reverse mortgages. Reverse mortgages is just another way to help finance your life by using the equity in your home and while you can still live in your home. So let's have a good conversation. No lies, no scams, just the facts and how you can use a reverse mortgage to your benefit. On this episode of Relax, I Got This.
A real estate transaction is potentially the largest investment we make in our lives. Whether you're buying and selling your personal home or investing in real estate, you need the knowledge to make the right decisions. Get ready. Robin is a Texas realtor and has the experience to give you the information you need to make the right decisions. Welcome to Relax, I Got This with your host, Robin McCoy.
Hey, everybody. Welcome back to another episode of Relax, I Got This. I'm Robin McCoy, a Texas realtor with Keller Williams. And today we are going to talk about reverse mortgages. Yes, reverse mortgages. I hear still to this day, I see a lot of people saying, oh my God, don't do that. And oh, it's the worst and all the things. And so I have an expert, Miss Alesia Dutton, who I have known for years now. And she's going to tell us why it is not the devil as it is as
As
it
it
is
used to
sometimes
be.
as it used to be and still portrayed. So Alicia was recruited into the reverse mortgage industry back in 2013. She had relationships with local bankers and financial advisors that made for a perfect transition into the reverse mortgage space. She was hired to do reverse and reverse only, so that is all she does. To this day, she is still hyper focused on this market. She has been on the board of NAIFA, New Mexico, and Dallas National Association of Insurance and Financial Advisors. It is the voice of the insurance and financial advisor industries. This position allowed her access to up-to-date information on government changes that affect retirement and asset growth. So very important. She is dedicated. I mean, I've learned so much. She dedicates her time to educating realtors and bankers and loan officers and walks everyone through the steps so that it is easy and understandable. So, Alicia, thanks for being here.
Thanks, Robin. I really appreciate it. Yeah, we go back 8 years, something like that. So
Then she went and moved away from me, so I don't get pancakes anymore. You were
we'll
my
get
one
there.
excuse to go eat pancakes.
Yes. You turned me on to the best pancake house in Dallas, which is what's the name of it?
The original pancake house, baby.
Yum. Yum. And I'm not a pancake eater, so she turned me on to him.
So tell me about you. Excuse me. Tell me where you are now.
Yep.
And let's kind of catch people up and we'll talk about what reverse mortgages are today.
Absolutely. So, was in Dallas, Fort Worth, Dallas, where Robin is, and moved to Las Cruces, New Mexico, because my husband retired. He's a little bit older than me, so he luckily was able to retire. And we always wanted to retire in New Mexico. He's got some family here. So we're in lovely Las Cruces, but I swear 50 to 60% of my business is still from the Dallas area. And that is because of me going around educating those advisors and loan officers and bankers and anybody that would listen to me. I pounded the ground there for 4 years and just got the word out of you need to hear the other side.
Right.
Yeah.
Right.
Yeah.
And you do, because again, there is a history of them being bad, and then regulations come in and things change, but it takes a long time to change perception, doesn't it?
Absolutely, especially on this program. And what I found is I didn't know that. That's why I'm so passionate about this program. That is what keeps me going every day, because I'm like, I know there's something you don't know about this. I mean, I've talked to people that are like, I've been in banking for 30 years and slam their hands down and go, why didn't I know about this sooner? It's just, and I'm like, yay, I did it again.
Because I think sometimes we say, yeah, I know all about it. Yeah, I know all about it, because we think we do. And so we don't even open the door to the conversation. It doesn't, if you're talking to a homeowner that is looking for an alternative, I don't want to, or I don't need to, or I can't afford to go into a senior community because those aren't cheap, ladies and gentlemen.
Mm.
And, I want to stay in my house. It's my
Yes.
house.
I want to stay in the house the rest of my days. That's
Yeah.
where you have the conversation. So the big change came in 2015. The program was, I say, overregulated, and I'm happy it was. It needed to be. So it kicked in serious regulations that got rid of anybody that was doing things on their own and breaking the rules. Can't happen anymore.
No
So
shenanigans.
yeah, nothing bad. I mean, it's all about educating the homeowner. I mean, there's literally required FHA counseling. It's like an hour-long conversation, 30 minutes to an hour on the phone, the homeowner and the counselor. I'm nowhere around. And it's just to double check that I haven't missed explaining anything to them.
And that they are
And
fully understanding, because
yes,
you get, and I'm, again, my mother would say I'm about ready to discriminate right now. But, as we get older, things change, right? And maybe, I know my 86-year-old mother, she called herself outdated the other day because some of the rules or the way things happen now, they're just a little slower to grasp.
yes,
And so it's
yes.
important that there is a third party that wants to make sure that this senior, potentially 80 years old, maybe not
Or
that old,
mom and
I mean,
dad,
mom
take care
and
of my mom and
dad
dad. Yeah.
are taken care of and
And
not
they're being
hoodwinked.
taken advantage of a lot these days, so they're
Yeah.
extra cautious, which I'm glad they are. My mom's gonna be 90 this year, so she's super, super cautious about stuff, and we're so glad she is. But yeah, things change, and I call it the old reverse mortgage and the new reverse mortgage. The new one is the one that, once again, I'm rare, and then that's all I've ever done. I've never done any other type of loan.
Mhm.
So don't go online and try and get information, because as soon as you push a button, your phone will ring off. They sell it to like 100 people. Your phone will
Yep.
ring off the hook. Go to your advisor or banker and say, do you have someone to refer? And hopefully they'll give you my name and number. But do you have someone to refer for a reverse mortgage? And that's what I go off of those referrals, is when
Yeah.
people say, I know the person. Call Alicia. She's the expert. She will answer your questions. No pressure. Just, if it's the right fit, you'll figure it out together.
Well, and this is also directed to the adult children,
Oh God,
right?
yes. Yes,
Because they are more than likely going to be involved in this conversation somewhere along the line. So if
absolutely.
you are that senior that is looking for information, make sure you include the adult children that you may have in the conversation with Alicia,
Yes.
so everybody understands everything at the same time.
I've had it where I'm sitting down at the table with just the parents or with the entire family.
Yeah.
It can be a family discussion if that's what they want,
Sure.
and I'm on their schedule. So the very basics are, they have to be 62 to qualify. And they're required to go through the counseling. And I guess the biggest misconceptions are the bank or the government own my home if I do one. No, that has never been true. And I still hear it today. When
Hmm.
you do one, it's just like a loan. It should be
So
called a retirement loan. And basically, when you do it, the bank or government is just loan. So Mutual of Omaha, who I work for,
okay.
Mutual of Omaha Reverse Mortgage does a loan with you. It's still under your name until both of you have left the home, whether that means moved away, sold the house, or both passed away. It is in your name, just like a normal loan.
Okay, so you're actually I mean, just to put it in common terms for mortgages, it's just almost a refinance on your house.
It's exactly what it is, but no payments are required.
But you okay. Okay, so there's where people are like, how can I take a loan and you and I don't have to pay for it?
Back in the 50s, they found a lot of people that needed loans, but couldn't afford a mortgage payment. They hadn't paid a mortgage in years, let's say.
Yes.
So
And
they
they're on Social
designed this
Security now, and we know how that goes.
So they designed this program so that there's very minimal fees. They finance practically all the fees, and no payments are required.
So then how is this a benefit for the government or whoever is backing this loan? How is this a benefit for them?
Be the leader you know you can be. Build your professional network and access education that takes you where you want to go. We are women of all ages and backgrounds. You deserve national recognition and opportunities to build relationships with people you want to work and grow with. Hit the ground running with the Charisma chapter of the American Business Women's Association. Meetings each month from 6 to 8:30 p.m. on the fourth Tuesday in Farmers Branch, Texas, and online. Come with us. Experience ABWA for yourself. Go to charisma.abwa.org to learn more.
How is this a benefit for the government or whoever is backing this loan? How is this a benefit for them?
Well, so the risk we take is we assume the house is going to appraise for more when
Right.
that person leaves
Okay.
the home, sells the home.
Okay.
So it gets called due once both people have left the home.
Okay.
So that loan, we loan them, maybe monthly payments. Maybe it's just adding up, and they owe us $100,000 once they both leave the home.
Okay.
The home sells for 200. The kids have up to a year to sell the home.
Okay.
They sell it for 200,000, pay us back. So we say we get paid back by the home. Pay us back then, kids walk away with $100,000. So a lot of people think, we pass away, the kids get nothing. Well, if the home is appraising for more, the kids could get a lot more, or the kids get a little more, but usually you ask the kids, and they're like, I don't care about the house. I'm just going to sell it. I'm not expecting the money. I'd
As long as
rather
it breaks even and I don't owe any money to anyone.
Which
And
they
my
won't.
parents, which my parents get to stay in their house, and they won't. So let's back up. I think we kind of got ahead of ourselves there, because
Yes.
you and I kind of know what we're talking about. You definitely know. I kind of know. So let's back up a little bit.
Okay.
So let's say that I am 62 years old. I'm approaching retirement. I don't want to leave my home. I'm perfectly capable of it. One, why would I want to do this? What would cause the need for me to do this? And then what would I do from there?
Okay. So there's two reasons why people do a reverse mortgage. Number one, they don't want to pay their mortgage anymore, or it would really help them out to not have to make that mortgage payment anymore.
Okay.
So that example is you're retiring, you owe $100,000 on your home. Its value is $300,000. Here's the value part. You get approved for anywhere between 40 and 60% of the appraised value of the home.
Okay.
Second biggest misconception, people think they get approved for all $300,000. Never been true.
Okay.
The older you are, the more you get approved for, because you have a shorter life expectancy.
Okay.
So you would get approved for, let's say $400,000 house, you get approved for 40%.
Okay.
Right? You get approved for $100,000. That covers your $100,000 mortgage payment. So we pay off your mortgage payment, and you, for the rest of your days, you're in your house, not making a mortgage payment.
Just paying, but let's say you are paying taxes and insurance.
Property tax, homeowners insurance, just like any loan. If you don't pay those, we foreclose.
Okay. So at this point now, you've paid off my mortgage. I'm living in my house. I'm covering the taxes and insurance, and we go on down the road until now I'm 75, and I decide it's time to leave the house for whatever reason.
Sure.
Whether I've died, my husband has died, we just don't want to live in Texas anymore. Whatever it is, we both decide to leave the home, or
Sure.
we are both leaving. Now what happens?
So you originally started with, we paid off your $100,000 mortgage. So that's
Right.
been growing over time. No payment
Right.
required. So it's growing over time. You now owe us, let's say $200,000, maybe $300,000. You sell your house for $400,000.
Okay.
Walk away with $100,000 to go to assisted living, to go to live with your daughter, whatever the plan is.
That 100,000 is.
But usually with your situation, what happens is you've decided to do the reverse because you want to stay in that home the rest of your days. Your kids live across the street. You're good. So you live to 95 years old, stay in your house, no mortgage. You pass away, kids sell the house, pay us back then, remaining monies go to the kids.
Okay.
That's the normal scenario. We always ask people, is this the home? Is this your last home?
So that's typically the people that are going to do this, is that unless something drastic and life altering happens, they intend to stay in that home.
The
Like
plan is to stay.
I had somebody tell me you're gonna have to wheel me out feet first. So that's their
Exactly.
plan.
Yes.
I'm leaving feet first.
Yes. So sometimes it ends up they have to go to assisted living, which if they owe 200, it sells for 400, they're going to walk off with 200,000 to go
Right.
into independent or assisted living. It's not meant to leave you with zero. It's the reason they only approve you for a certain amount is because they want to make sure there's some left for either the kids or for you
Yeah.
to move on, whatever you need to do.
So what happens if there is no money left? Let's say that that house you paid off $100,000 and now it's $300,000, but the house sells for $250,000.
That's one of the great things people love hearing. It's an FHA, government insured loan, which is a non-recourse loan. No debt is ever forwarded onto the estate.
Okay.
So if
So
it's
now
not worth anything, the kids deed in lieu the keys to Mutual of Omaha and say, thank you for keeping a roof over my mother's head.
And it's all done.
Done. That's the risk we take.
Okay.
That's the risk we take.
So what's so bad about this?
Actually, I want to go to scenario number 2, and then we'll
Okay.
go to the one negative thing I can think of.
Okay.
Right?
All right.
So scenario 2 is the individuals have no mortgage.
Okay.
And for some reason, they need to get to some additional monies. Or here's a good example with the stock market, the way it's been going. I talked to a lot of advisors about this. They call it probability of success. So when a financial advisor looks at your monies, they go, okay, you have a probability of success of 99%. Well, that's great. So we're assuming you're going to live to 99 and you will not run out of money until then. Okay, I can deal with that. Well, with what's been going on with the stock market, they're meeting with them and saying, no, you're at about 80% now.
Yeah. Yeah.
Could make you people are living longer, right?
Yeah.
So they say, where's another avenue where I can sock away some money? You own your house free and clear. Did you know with a reverse mortgage, you can tap into 40 to 60% of that? So let's pretend these people are 80.
Okay.
And their probability of success has gone down. They're just looking for another avenue. They own this beautiful home, free and clear. They're not going anywhere. They can tap into $200,000, half, let's say.
Okay.
You sock it away in the reverse mortgage line of credit. That's what I educate advisors on.
Okay.
That reverse mortgage line of credit has a growth rate on it that is 7 to 8% right now, because as rates go up, that growth rate goes up too. So where can you sock away money with a growth rate of 7 to 8% right now?
So you can take that 200,000, just to pick a number, and a financial advisor can have, so this is not through you, but through a financial advisor or
No,
through you.
it's the loans line of credit. It's a reverse mortgage line of credit. You leave it with us.
Oh,
And
okay.
it's
And I can access it, or it just stays there?
whenever you want. It's your money.
Okay.
So
Okay,
instead of
but
having
you're getting
like,
an 8% return on it, though.
it's
So
a
if I
growth
called
rate,
you
guaranteed
years
growth
down
rate.
the road and I needed cash for something, I had a medical situation, then I could say I need 50,000 of my 200 that's in there, and I have access to it.
It's a phone call away. It's your money. It's like having a really nice savings account with us with a great growth rate. You give us a call within 3 business days, it's in your account. Sock away. So that
Interesting.
200,000, and we have what I show them as an amortization schedule that shows if you don't touch this money, look at it grow.
Yeah. Yeah. Because then, you do pass, and I'm sure the other rules kick in, right? You've both left the house. Now the kids have a year to sell it, and whatever it sells for, pay the difference, and you're on your way.
If they've never, 2 things about the line of credit, it's tax-free monies. That's why advisors like it, because they say, okay, we've got our assets here that if we tap into could cost us some money, or we could tap into that line of credit for that new car. Your car died, you need a new car. Use the line of credit monies. They're tax-free monies. They're not considered income.
Wow.
Huge.
Wow.
But let's say they barely used 50,000, both passed away. All they owe us is the fees because they were financed. Let's say it was 10,000 in fees plus the 50 that they used. They only owe $60,000. They never tapped into that line of credit. They were just letting it sit there and grow. The other thing is the kids they have 90 days to refinance. So they could get mom and dad's home for $60,000.
Oh my goodness. So they could refinance it finance out of that line of credit, reverse line of credit, into a traditional loan. And now they've got this house to do with whatever they wish.
Yes,
For
they
their
can live
kids,
in it,
to rent it
own
out,
it.
to move into, whatever.
Yes,
Whatever you
yes.
wanna do. Wow, I did not know that, and we've
So
been talking about this for 8 years, and I
yes, yes,
so, you know, there's so many pieces to this, and
yes.
everybody's situation is different.
Everyone's different. I mean,
Everyone's
you could
different.
you could get monthly payments. You could take out a big chunk at the beginning just to pay off all any debt you have and then just forget. I always tell people, put it in that line of credit and forget about it for a rainy day. And if it
Yeah,
starts growing and you're like, I've always had the dream of going on a cruise,
there it
you're
is.
80. Go on a
Yeah,
cruise.
go on a cruise. Go on a cruise. Well, and it's true, right? Just go forget about it. If you are able to, have the life you choose with your
Yes.
Social Security and your other investments that you might, 401ks and IRAs and stock or whatever other
Yes.
financial program you're on, and this is just sitting here growing, then you do get to go on that cruise if you want to, or you
If
do get
that's how
to,
as long as there's
yeah,
enough there for the rainy day. Rainy days happen.
yeah,
I hear a lot
yeah,
of rainy day stories. People are like, I didn't expect this to happen. I didn't expect my husband to get Alzheimer's at 56 years old. Really sad.
yeah,
Going into memory care at $10,000 a month because they want the husband to be in the best environment that's best
sure.
for him. And that's where I talk to a lot of memory care properties. And I say, look, if you have someone coming in here and they're like, I can't afford to pay it anymore. He's living a lot longer than he's healthy as a horse. He just needs to be in memory
Yeah,
care. I say, here's a thought. You live in the home. As long as one of them's living in the home, you own
and
it
it's
free and clear,
fine.
tap into those monies, use that money instead of going through your assets and having nothing left for you, and you're only 78 years old.
Yeah, yeah.
It's
Well,
just an option.
and I tell so many people, and they don't understand often that your house is a huge asset. And it's not just when you sell it. Sometimes, it's when you buy it is really when you make your best money is when
Decision.
you
Yeah.
buy because values go up. And before the craziness of the last few years, on average, about 3%. They've
Yeah, but
gone up a lot more over the last couple of years.
yes.
But your value, unless something tragic happens in the economy and
Yeah.
nobody's got a crystal ball, but if you have this house, it is yours
Yep.
as long as you can pay the mortgage and you pay this, but it's more than that. It's retirement. You don't have to sell your house and move out to, experience the equity that you have in that
Yeah.
and the value that you have in it. And
Yeah.
I think that's a very big misnomer for a lot of people.
Yeah. A lot of people don't realize a large percentage of their monies are home equity.
Yeah.
A lot of people, that's their biggest one.
Yes. I mean, your
So
house is typically for most people the largest financial investment and obligation they're ever going to have.
and
And
tool.
you want what's that?
And it's a tool. It can be a
It's a
tool.
tool. Yes, I was
Yeah.
just going to say use it for what it's, for what you can use it for,
Yeah.
right?
Yeah,
It's
absolutely.
it's not just keeping you dry and warm and a roof over your head, but it is creating wealth for you to use when maybe you no longer can generate income on your own for
Yes.
whatever reason.
For whatever reason. Exactly. Life happens.
Yeah,
Life
it
happens.
does. It does. So what's the one bad thing that you can think of? So when
They're
everybody goes, yeah, but, yeah, but, yeah, but.
Yeah, but they're expensive. They're an expensive loan. So
Yeah,
doing a normal refi costs a couple $1,000s, right?
right.
We're used
Yes.
to that. The reverse mortgage has a mortgage insurance premium. Instead of a PMI, it's an MIP with a reverse. That mortgage insurance premium is 2% upfront of the value of the home. So that
Okay.
could be $6,000
Right.
on top of all the other refinance fees. So if you've got a $8,000 normal refi, add 6 to that. Now it's a $14,000 loan. They're like, oh my God, that's a lot of money, right?
Yeah.
We finance everything. So they start with a balance of 14,000. We finance everything except for 2 fees. The $150 for the FHA counseling phone call, which they pay directly to the FHA,
Yeah.
and a $300 appraisal deposit to us. That's it. $450 out of pocket, Everything else is financed. Once again, it's a loan that was designed for people that were retired.
So people on that fixed income where they're not necessarily having, salaries come in.
Yes.
But if you can finance all of that.
Finance. Some people, they've got money and they're like, you know what? I'm going to pay it down. You can't pay it down to zero, but they're like, I'm going to pay off $10,000 off. And I've got some money on the side, pay it off. Sure. No problem. You can make payments to a reverse if you want to.
If you want to.
If you want to.
So, but there's options, right? So it's
There's
not
just
black
options.
and white. It's nobody's going to steal your house when you die. What else? What else are the big things that the people are just always saying? They're just so fearful.
They took my house. They took my house away. Well, did you pay your taxes and insurance? There's always another side of the story.
Exactly.
They took my mom's house. They kicked my mom. So one of the things I hear a lot is so-and-so passed away and the other spouse got kicked out of the home. They were not on the loan.
I was going to say.
It used to be, because you have to be 62. Well, one's 62 and one's 54. But so they did it under the husband's name. He passed away. So wife has 90 days to refinance or up to a year to sell. She's not on the loan.
So okay, that's a really good question then. So I've got one that's 62 and one that's 59.
Yep.
And so we do it under the 62-year-old.
It's not allowed anymore. That's one of the things they got rid of. So now it's okay. It's okay to do a loan 62, 59 it goes under the 59-year-old's age. So you'll get less money.
Okay.
But both of you have to be on title. Now, Texas, because it has its own laws, is the only state where both of you have to be 62, which that can't hurt.
Oh.
But any other state, only one of you has to be 62.
Really?
Yes.
Okay. But in Texas, since that's where I am, not that means anything, because I know I've got people listening in like the United Kingdom. It's kind of cool. But in Texas, you both have to be 62.
Yes.
Everywhere else, just
only
one of the but you do have to be on title, I'm sure.
You have to be on title. Yes. And you don't have to be a spouse. You could be the two sisters live together.
Okay. Okay.
A daughter and a mother, but then it goes under the daughter's age.
Yeah. Yeah. So you just have to, and that's why you have Alesia, because you can sit down and you can talk to her and you go, okay, here's our situation. We're two sisters. This is my mother. This is my aunt. This is, whatever the relationship is. And she can guide you into the best way to do this. Or if in fact, maybe this isn't for you today. Maybe you want to wait 3 years or 5 years or something like that.
Right.
Where it makes more sense for you.
I've had people where it's a mom and the daughter, but the daughter had bad credit. So I said, you'd have to take her off title. And if something happened to you, the house, she's not on title, so they're like, let's fix her credit up. Then let's do it. So that if something happens to mom, she's still covered under the reverse mortgage.
That she can still stay
there. Or
there.
let's wait till she's 62. There's
whatever it might look like.
Yeah.
But you know what? Again, every situation is different. And I try and get that across as much as I can, because everybody likes to say, well, my uncle's brother's cousin in Minnesota. Well, that's awesome. But you live in New Mexico and you are 40 years younger and it's 10 years later.
Yeah.
So everything is different. And you have to talk to an expert in what you're doing for the day, time, and place that you live and you are. And your current space in this world.
Yes.
What that's, So when should somebody call you? Is this the year that you're going to stop paying rent? Is this the year that you are going to finally purchase your own home? But where do you start? How do you get your questions answered? Well, I'm Robin McCoy, and I'm a Texas realtor with Keller Williams. Relax, I got this. I have a home buyers masterclass the first Saturday of every month, and it's free to you, and it's all online. Just text the word masterclass to 214-226-3770, and we'll get you registered and on the path to home ownership. So when should somebody call you? When should a person pick up the phone and say, Alesia, I heard you on the podcast with Robin, and I'm curious? I guess right when they're curious.
Right when they're curious. And they could be 59 and be curious. It's like, just learn about this so you can put it in your financial plan. You're
Yeah.
planning for the future. So this is the perfect timing. This is a perfect time to bring up the reverse for purchase program,
I was
which
going to ask
a
about that.
lot of people, this is why Robin and I met. A
Yeah.
lot of people don't know about this program. It's been around since 2009. I have told every realtor in the world that I could meet about this, and they're like, huh? Or they just don't, they like the idea, but they can't explain it right, but you'll hear more and more about it. Reverse for purchase, or you'll hear it called a HECM for purchase. HECM is the new name it kind of got in 2015 when it became a better program. It's a home equity conversion mortgage. My tagline used to be, what the heck's a HECM? That's how I remembered HECM. But HECM for purchase, reverse for purchase. This is a program designed for people that are retired that want to move. You're in a 2-story, 6-bedroom house, the family home. You don't even go upstairs anymore, or, it's too much maintenance, or things are starting to break down. You really want to move to this, oh my gosh, this 55 plus golf, or you just want to move closer to the kids in another whatever it is.
Right.
This opens up the opportunity for them to even think about, oh, we could move into a retirement home, whatever that means. So, people are in their house and they think, okay, I can sell it for 300. Where am I going to get anything for 300 or 200? Where everything has gone up so much, they think, well, that's great. I can sell it like that as is, but where am I going to go? I don't want to live in a 1-bedroom apartment, even if I'm moving to Minnesota or whatever, things are expensive.
Yeah.
So reverse for purchase. So they're going to sell. They have a $300,000 home. They own free and clear. They're going to walk away with $300,000. They're moving to Texas to be close to the grandbabies. So they look for things at 300 and they're just like, we can't get even near the kids because they're in Frisco or whatever it is.
Right.
The reverse for purchase basically is they kick in 60%. Okay. We kick in the remaining 40%. So that 300 is now they could spend more like 400 now, let's say, or they only have to put in less. They find a place for 300, but they only have to put 60% down. So they're not taking all their money and just plunketing it in a new home.
Oh,
they put down 60%. We put down that 40. We loan them that 40%, but no mortgage payment required.
At all?
No, it's a reverse for purchase. So that,
and you have to be 62 for this as well.
62.
Okay.
If you're in your 80s, you put down 50, we put down 50. If you're in your 90s, they put down 40, we put down 60. The older they are, the more we kick in. So let's say they're in their 80s, 50-50. They find that $300,000 home, they get it for $150, leaving $150 in their pocket. Advisors love this because they're not taking all their money and putting it down on a new home. It's leaving them some extra money to make their money last longer.
So do I have to own my house free and clear to do a reverse for purchase? Or
no. So whatever you're going to walk away with. So
okay. So I pay off my note and I've got 200 left or whatever the number is. So now I can come to you. I'm buying my house in Florida and it's 400, but I've got 200 here. So then you'd kick in the other, whatever, based on age and numbers and all of that, but that's how that would work.
You get a pre-approval letter, just like with any loan. So we approve you for a $400,000 home, or we approve you for a $350,000 home. You go find it. You put 60 down. We put the remaining 40% down.
How about that?
How about them apples? It's very different. It's very confusing. But it really gets down to the facts. You don't have to put 100% down on it. And there's no mortgage payment. Nothing is due till you leave that home. Sell it, leave it, and then the house pays us back. And if the house isn't going to pay us back, hand over the keys.
And okay. There it is. There it is, ladies and gentlemen.
And that's all I got.
And that's a lot. So that's a lot to unpack. And we did it very quickly, and we did not dive real deep into particular situations because we could be doing this, all day. So here's what I would suggest. First of all, if you are approaching the 62-year mark and you're starting to wonder, what are you going to do? Are you going to stay? Are you going to move? Are you going to go? Are you going to do this? Is give Alesia a call and just kind of start talking about options. if you are an adult child of parents that are in a home and you're also kind of wondering how long are they going to be able to do this,
Mhm.
or they're in 4,500 square feet and they live in 1,000,
Yeah.
does this make sense anymore?
Yes.
Call Alicia and ask some questions. Don't assume you know what it's all about, because you probably don't. You probably don't,
Robin, I
because
have
it's
one
just too
last
confusing.
example that's huge
Absolutely.
now, especially with COVID and a lot of the communities independent assisting memory care, they're all full. They
Yeah,
can't build them fast enough. Um,
sadly.
they want to stay home. They don't want to go.
No.
They want to stay home. All their stuff's there, right? And you have to get rid of a lot of your stuff to move, right?
Yeah. Yeah.
So they want to stay home, but the in-home health is digging into their assets. Another great reason to tap into that equity in the home. They can stay home as long as they want to, as long as they can afford to pay for in-home health. Once again, a lot of
Yeah.
communities are full, so they're having to stay home anyways to have home health come in. It
Use the
helps with
equity,
those
use the
costs.
the house. Again, it's a
Yes.
tool to help you take care of you
Yeah. In your own home, which
in your
most
own
people
home
want to
with
be
your
in.
own stuff.
Yeah. You need handicap ramps and things like that done. It costs money.
Yeah. So
Convert your
you
home.
can so you can then use that money to adapt your home so you can age in place.
Age in place.
Maybe we take out that step-in shower and put a walk-in shower, or maybe you do some, you can use that money to help you adapt your home so that you can remain in it.
Yep. You got it.
Mic drop.
Bye.
That's it. We're done. So I want to make sure that we're going to let you know we're going to have Alicia's all of her information in the show notes. So please reach out to her with any question. She is a wealth of knowledge because it's all she does. It's all she does. She
I love
doesn't
it.
do a FA. And now, while this is a type of FHA loan, she
But
doesn't do
that's all
your
I do.
traditional FA, VA, conventional loans, buy a
Mhm.
house, all that stuff. All she does is reverse mortgages, and she's been doing it for 10 years. She's been through the old way, the midway, and now the best way.
That's right. That's right. And
So,
I have a business partner who habla español. She speaks Spanish. You can check us out at www.reversemortgageladies.com. So that's helpful too.
yes. So the bilingual aspect is there as well. So, oh my gosh, always so much to talk about.
I know you always learn something new.
I always learn something new. And
Yeah.
again, we used to have pancakes several times, over the course of a number of years. And
Yes.
I still am learning things. I'm still learning things. So that's why I always say I don't talk about what I don't do, but I have people on my team and on my side that are experts
Yes.
that will take care of everybody.
Yes. Yes.
So, all right, Alicia, thank you so much for being with me today. And also, thanks for listening to this episode of Relax, I Got This. Make sure you hit that subscribe button so you never miss an episode. We'll talk to you soon and see you next time.
Thanks for joining us for Relax I Got This with Texas Realtor Robin McCoy. Check out all the show notes for contact information on Robin and her guests and to access your free buyer and seller guides. Also, don't forget to hit that subscribe button so you never miss a conversation. Thanks again, and we'll see you next time on Relax I Got This with Robin McCoy.